Hello and welcome to Newsmaker. For much of February, Indian markets worried about the fall in the shares of the Adani Group. And for much of March, we are worrying about the bank collapses in US and in Europe. They are threatening to look like an action replay of the Lehman crisis, actually. Today, I have with me someone who can speak with authority on both these problems. Rajiv Jain, promoter, CIO and portfolio manager of GQG Partners, the fund which bought 15,446 crore rupees of Adani Group stocks on March 2nd and ended the hemorrhage in those stocks. Rajiv, thank you very much for joining me today. I'm tempted to ask you about, the current banking crisis, but I'm going to start first with Adani and then, of course, the current problem. You know, when I wrote to you on March 2nd for the interview, you said, no, you have to first speak to your investors. Now, who are typically the people who invest in your funds in which you have bought these Adani shares? Are they sovereigns? Are they, widely held funds, HNIs? And what did they ask you on that day?
Yeah, it's good to be here. So we have a very sort of wide variety of investors, from sovereign wealth funds, but also a lot of pension funds, mutual fund investors who invest $10,000 in some of our mutual funds, and in US as well as in Europe and in Australia. So it's, we have over 2,000 institutional clients. So it's extremely broad array of investors who have money with us.
Mm-hmm. And the
then
more
the second
important
part of the question you asked was,
what did they ask you?
Yeah. So I think the key aspect, by the way, a vast majority were actually pretty thrilled, because they said, look, that's what we pay active managers for. Active managers are supposed to take active risk, obviously with calibrated, sort of in terms of the weighting and doing our due diligence, et cetera. But one of the big concerns a lot of our clients have had is that a lot of managers simply sticking or hugging the benchmark, which is not exactly why you get paid active fees for. So vast majority were actually pretty happy. Obviously, they were sort of very curious what we found, what the others had not. So I think the discussions was around that. And to be clear, the Australian trip was set up 4 months in advance. So it has nothing to do with this. But I think it was a very good opportunity to talk about how we think about investing and differentiating versus other managers.
Oh, they were thrilled with the investment. Now, why I'm a little surprised, because look at the other investments you have, Petrobras, Vale, or even the Indian stocks, SBI, NTPC, even ITC for that matter, SBI. Now, these are all not stocks with the kind of value. I mean, Adani Enterprises, for instance, let me take just the big stock. Even at the price at which you bought, 1410, was 12 months, trailing 12 months, about 78 times. It's not a typical stock you buy. So it didn't surprise your investors, the complete outlier in terms of PE?
No, not really, because if you look at our history, we have owned a lot of times very high multiple names. And the reason is because the question is where the earnings going to be 5 years out, right? So we used to own Hindustan Unilever at 40 plus times earnings and so on and so forth. So, and a lot of names outside India. Amazon was a fairly high multiple name for a decade that we owned it. But I think the real question is, the way we try to think about is where the earnings are going to be in 3 to 5 years. And from that vantage point, some of these businesses are actually primed as the CapEx begins to stabilize a little bit. The free cash flow generation is going to be much more like hockey stick, we believe. So the question, not the P today, is, but the question what the P is going to be 4 or 5 years out. And that's why these names look very attractive. And by the way, the same analysis you could have made for a lot of the new industry, the new tech, so to say, like Zomato type names. I mean, you're really looking at what the addressable market 5 years out is and what the earnings are going to be. And on that basis, actually, they look very attractive.
But addressable market for Zomato is very different from the addressable market for an infrastructure stock. I mean, India has power. By that logic, you should have bought Tata Power some years ago. I mean, is it infrastructure has only that much returns? Because as you go lower down the queue, there are not people who can pay a great deal of money for 1 unit of power. Mumbai, some people are able to pay 11 rupees and not even charge that much per unit. But as you go down, which is the new power consumers, most of the discoms are not even paying properly because they are supplying to people who cannot afford much. So is this argument that you will get such huge multiples so convincing?
Yeah, because I think see, first of all, you have to look at what is the capital expenditure today and how they're depreciating those assets. So when you look at some of these assets, the maintenance capex is very low. For example, if you look at Adani Transmission, there's almost no maintenance capex. But if you look at the capex plans that they have versus, let's say, Power Grid, which a name we like quite a bit, by the way, and we do on NTPC, as said, they are by order of magnitude greater than those. So when these assets are depreciated at that fast rate, the initial earnings get depressed and the capex is very high. So because India is not, it's kind of a unique stage of its development in terms of the utilities. And from a utility perspective, there'll be a lot of privatizations, and also there'll be opportunities to selectively buy assets. I mean, if you look at, for example, the value creation, you said Adani Enterprises about the Mumbai airport. The value creation has been dramatic. I mean, we are still not talking about the monetization of their real estate, the second new airport that is coming along. And I'll give you one data point. If you look at airports of Thailand, what is that trading at, and what is Mumbai airport trading at? And I would argue that Mumbai airport over the very long run has much more headroom than airport Thailand, because the location of the airport itself. So when you start monetizing those things, the value creation could be pretty significant, but obviously it doesn't fit your traditional low PE, sort of parameters. But I think that's a disconnect we believe here.
Okay, I'm just persisting for a bit more because one investor wrote to me this question a few weeks back when this transaction was getting done. See, he wrote, and he's a fairly big investor. He writes, Adani Enterprises pre-pandemic market cap was around 20,000 crores, and even if he were to add a very generous value of 50,000 crore, that is double the value that GMR got for its airport business, we will still be short of the 1.5 lakh crore that 1.55 lakh crore that your market cap valuation was. So, I mean, what valuation are you giving? What multiple are you ready to give? I mean, this is his question.
Yeah, I mean, it's a common sort of question that we haven't gotten is what has changed in the last 2 years? So if you look at, for example, the value that Adani paid for the airport, you have to remember that was sold almost in bankruptcy. Things don't sell at full value in bankruptcy, right? Or Reliance Infrastructure wasn't exactly sold at full price, right? If you look at SoftBank Energy, was basically sold for a song because they couldn't run it. I mean, they had solar assets not far from where Adani had, and they couldn't run it. So look, I mean, I think the real question is, what are these assets worth 3-5 years out? So if you look at breakup value in a bankruptcy, of course they would look cheap. But airports of Thailand is worth $30 billion, by the way, 30 billion. Okay. We would argue that the whole Adani Enterprises, if you take a 5-year view, that itself might be worth more than the company itself, one asset. And we're not talking about 6 other airports. We're not talking about other, the coal assets, which generates over $1 billion probably of free cash flow. And there's room to expand. And look, their coal cost is running at $40 odd. Look at the way the thermal coal cost is. I mean, look at even after the price has come down by half, you look at over $200. So I think when you start adding value over the sort of few years, it'll take time. Okay. Some of these assets individually are worth more than the business itself.
Okay. Now, let me come to the other aspect. I mean, there's a lot of breaking news, and one of them is one of the charges against the Adani stocks was that many of their non-promoter, so-called public shareholding funds are invested entirely in Adani, or overwhelmingly. 95% in Adani stocks. Now, one such stock, Elara India Opportunities Fund, news was just breaking a week ago that they are also co-promoters in one of the defense units along with the Adani group. Now, do not your investors worry when such news breaks? What if SEBI were to take cognizance of it? After all, they have been asked to investigate.
Look, I mean, I think I don't want to go into specific allegation because, as you know, there are 350 pages. We'll be here for next 5 days to go through each and every one of them. Most of it is all rehashed news. I mean, it was reading like FT 5 years ago, not exactly yesterday. Number two is I think what we need to
this
think about
Elara news is
the
the
context
Elara
of
news is
what
fresh
these
news.
allegations are. Sorry?
The Elara as a co-promoter in the defense unit is new news. Now, what I'm saying
I
is
realize
that,
but I mean, some of this is rehashing
it's also
of the
new
whole
news
allegation.
that SEBI is it's also new news that SEBI is been asked by the court to investigate. So, I mean, don't
look,
investors come back
I'm
to you
sure there'll be
worrying about
investigation.
these things?
No, I understand that, but the question is, what is the context of these allegations? The context of these allegations is, was there an intention to defraud investors, or was it a little bit optically problematic, and that's hence been sort of cleared up, or is getting cleared up, right? So if you go back to the Reliance, and I remember in the 90s, the allegations were remarkably similar, but the context was they still created a ton of value for the shareholders. Right, so I think if this intent is to defraud investors, that's very different than so optical stuff, which kind of looks messy, but the intent isn't to. At least that's our understanding so far. Look, we will stand corrected if that's wrong, because we have no access to all of this. In terms of, I mean, you getting the same news as we are getting. So, but I think we had to zoom out and look at the context of what is happening here, and what is happening here, we believe, is these are remarkably good assets run by an extremely competent investor, a promoter. I mean, if you look at Adani Ports, that wasn't, I mean, nobody was bidding for that when they first got it. That's actually, why did they get Mumbai Airport? Was it because of flourishing or because of bankruptcy? So I think we believe that under this, group, some of these assets could actually flourish. And look at, by the way, we did a lot of work on the coal mine assets and the Carmichael mines in Australia, and we were actually surprised the resistance they got, and despite that, they delivered coal a year and a half ago. That's actually a remarkable skill set in our view, because at the end of the day, delivery matters, right? What do you create value for shareholders?
No, I take your point that execution and delivery creates value, but there are also some minefields here, and I'm just wondering if your investors ask you these questions. What if one of the related party allegations are proven right? SEBI will come out with its report in 2 months or less than that. Does that worry you or your investors?
Look, our job is to worry about everything. I mean, if you don't want to worry about anything, stop investing, right? I mean, are we worried about credit suisse going under and the impact rollover banks? Are we worried about elections next year in India? Are we worried about that? That's our job. So the question is, what is the risk reward that you get, and how you handicap that? There's no perfect investment. I mean, if you look at, for example, I'm picking on some of the names that we owned before, Nestle India or Hindustan Unilever. At the valuation that they have, if the growth slows down, what is the risk there? I mean, one of our investors said you could have lost 75% Facebook with everything looking perfect. So that's investing.
Okay. No, did you speak to anybody in government or regulators for comfort before taking such a big investment call?
No, look, I think it'll be unfair on our part to ask them. It'll be unfair. It'd be sort of wrong on their part to answer before the investigation happened, right? So we did not reach out to any existing regulator. We did talk to some of the former ones who are sort of free to talk about it, but not the existing regulators. By the way, that's not just our style anyways. In fact, we try to do our own due diligence
to the CNBC,
and see whether we can get a reasonable sense of what's wrong and what's right.
Okay. No, when CNBC interviewed you, CNBC US, you said that you had spoken to one of the bankers, and they said we are even ready to lend them even more, one of the bigger bankers. Was that an Indian or a foreign lender?
Well, it's actually both have said that. I mean, DBS has said that in the public conference call, right? I mean, DBS Singapore, but in this case, we've talked to one foreign and one Indian banker. We talked to Total, for example, right? I mean, we talked to some of the other partners, and it's remarkable. Not one said there's a fraud. See, that's the disconnect here. I mean, I understand there's a political connotation to it, but I think we feel, look, there's always the opportunities are created when there is some cloud in the air. Otherwise, why would things sell off all their own? There's always has to be some issue out there for markets to react the way they react.
Okay. Well, I'm compelled to take a break for commercial reasons. Back in a jiffy, Rajiv, a few more Adani questions and more banking questions as well. Back in a jiffy.